blowout monthly jobs report on Friday sparked worries that interest rates are set to rise sooner rather than later. So how can you protect your investments? And if the latest economic reports are looking so good, why has the stock market been performing so poorly? We're joined now by David Edwards, president of Huron Capital Management. Good morning, David. Welcome back to the show.
Thank you.
So let's just start with that big picture question. We were going to bore you on some specific stocks in a minute, but first of all, what about the jobs report? What about interest rates rising? Does that have to be bad for stocks? Is it just a question of the uncertainty that's hurting the stock market now?
I think it's one of these tipping point situations where forever we've been worrying about jobs. Why haven't they grown? All of a sudden they're growing so dramatically that causes people to revalue everything, not just stocks, but gold prices, currencies, and so on and so forth.
So are we just in a momentary, like you're swimming one direction and all of a sudden you have to stop and, do a little treading water
Sure.
before you can go in another direction?
This is no surprise to my firm. We forecast that the 10-year Treasury would be at 5.25 by the end of 2004. We're already at 4.8. To buy stocks in a rising interest rate environment is like swimming against the tide, but at the end of the day, the markets will be higher.
They will be higher. You think they're going to move higher in spite of this? What about, let's take a couple of the big picture factors right now. One is certainly the presidential election, the scandal over the prisoner abuse in Iraq, in a sense that this is obviously not just bad for the prisoners and for our soldiers and for our country, but another tough issue for President Bush in an election year.
Sure.
Is that weighing on Wall Street?
Absolutely. I think if you look at the market as being in a trading range since January 1st, we're actually slightly below unchanged on the year. On the one hand, you've got economic reports pushing the market higher, earnings spectacular pushing the market higher. On the other hand, when we were talking about a year ago, I said it looked like Bush would win pretty easily. Now it looks like he's going to barely squeak by. It could lose still. So investors hate that uncertainty. The situation in Iraq 2 months ago, it looked fine, it looked like we were going to hand it off on June 30th. A month ago, it looked like it was all going to fall to pieces. Now we're back to some stability. The situation with the prisoners, I don't think that'll be an issue in a week or two. That'll blow by. Investors hate uncertainty, and they're willing to overlook the positives right now and focus on the negatives.
Okay. In terms then of what people should do with their money, because I know one of your themes has been the terror aspect.
Mm-hmm.
Let's terrorist attack proof your portfolio
Sure.
by staying away from stocks like oil that could be hit by any kind of big event in the Middle East, for example.
It's more the hotel and the airline stocks that I stay away from. Energy stocks, I think, are good for the time being. I think not only do you have to terrorist-proof your portfolio, now you have to interest rate-proof your portfolio. And so the sectors that are most harmed by higher interest rates are real estate investment trusts. We've seen them down 15% in the last month. Brokerage stocks, less carry trade opportunities, less bond underwriting, some of the financials that are more tied to the interest rate curve. But you look at those REITs, and they're yielding 8% right now. That might be a good place to come back in 3 to 6 months, pick up the higher yield at the lower price. Another sector that is harmed right now that might be a good opportunity is preferred stock, which has the advantage now of that lower tax rate. The stocks that are not harmed by higher interest rates are the stocks that have low debt and generally don't rely on consumer financing. So your semiconductor stocks were up 1% on Friday when the market was down 1%.
And I guess another thing that's happening for the tech sector broadly is people figure if businesses are so confident that they're hiring or things are going that well, they will be investing in PCs, software, all the kinds of things that are going to benefit the tech sector.
It's a growth environment, so the traditional growth stocks ought to do well.
Okay. Let's look at your picks. Let's start with Teva.
Yeah, 3 months ago we were talking about the mid-cap stocks, and I'm going to go back to that same list because the fundamentals are still the same. We've got Teva. It's a generic pharmaceutical manufacturer, less debt than the average S&P 500 company, had a pretty good earnings report recently. That's a good one to add. Okay.
And how about Ecolab?
Ecolab. It's a funny little company you would never see. Yet its vans are everywhere. They provide industrial strength cleaning chemicals to hotels and whatnot. And if you think, okay, the economy is doing stronger, more demand for these kind of chemicals.
Okay, and they are ecologically sound, or they just call themselves
I don't know you could call them ecologically sound, but they have a nice name.
Okay, good. And a nice story behind them. How about Computer Discount Warehouse?
Okay, this was once upon a time a tear sheet catalog retailer. They've gone up the value chain now, provide consulting. They're providing solutions rather than products.
Okay. Well, David Edwards, we're going to leave it there. And I want to say again, president of Huron Capital Management. We're apologizing to our viewers. We're having a little bit of trouble with our graphic system this morning. I think those little Monday morning gremlins have gotten us. So David Edwards, Huron Capital Management, thank you so much for joining us. And David, If people wanted to follow up on your views or try to get in touch, website, some way to...
HeronCapital.com.
HeronCapital.com. Great. Thanks so much.
Thank you.
Up next, we're going to go live to Times Square and get the pre-market buzz from the NASDAQ market site. Also, we're going to get the latest from Wall Street. Stay with us. You're watching CNN Money Morning.